Something more than a closed door flat on the floor. I can offer so much more. All I ever wanted was to feel at ease. All I ever needed was to get up off my feet. 'Cause I believe in hold on just a little. We'll meet right here in the middle ground is where we'll stand. Let go of the brittle, 'cause you'll find life is a riddle that we're not meant to understand.
We're streaming? Good. It's you know, I was listening, doing a bunch of behavioral psych stuff. Go ahead and fire it up. It's Jason Bible, Texas Real Estate Radio Network, here with Brian Burr. We're going to talk about notes. But anyway, so I'm doing this whole study on behavioral psychology right now. We're talking about the driver's license song for the audience out there. It sounded terrible. The first 5 seconds I listened to sounded awful.
Brutal.
It's brutal. But it's like, you know, there's these things that, it's like romance novels. It's like 50 Shades of Grey and Twilight. Like every 10 years, 7 years, it's the same story.
Yeah.
Right? It's just repeated over and over again. So it was funny. I was listening to a podcast yesterday, and they're all waiting for the next one. When's the next one? What's the, is it 50 Shades of, Twilight, which is, I guess, werewolves and vampires, right? So
It's Bridgerton. It's Bridgerton, that new Netflix special.
yeah.
It's got all the nudity. All the girls are watching it, and it's like a fairy tale, in a castle. I haven't seen an episode, but I've seen, like, when I walk by Chelsea,
Yeah.
she's glued to it.
Really?
There's a bunch of scenes in it that, like, all the cast and the characters were on Saturday Night Live. They were also so it's a hit new show now.
Oh, new show.
Bridgerton or Bridgeton.
Okay.
Don't watch
Interesting.
it.
Don't do it. Just don't preserve your sanity here. Don't do it. So we're gonna talk about real estate today.
Yeah.
You're looking at a deal down the street from your house.
Yeah.
Little apartment complex over there.
So it's a third ward. That's the area that I love. Love that area. It's a 16 unit. It's got some potential, but we haven't actually gotten anything serious.
So third ward, for those outside of Houston, you know where downtown Houston is. Houston really has like three downtowns. They got the Galleria, the Medical Center, and then the actual downtown. Third ward butts right up to like the southeast side of downtown. You can drive a golf ball to, any number of downtown towers from your balcony, right? I mean, It's like right there. Truth be told, it's the only pretty view in Houston because Houston's pretty flat.
Yeah.
So there's no I want a view of the mountains. There's no mountains there. So
right.
You get the downtown skyline. That's as pretty as it gets, right? Unless you have a cool backyard.
Right. You got to build up if you want any type of view.
Yeah, that's about it. So sometimes you can catch if you're on the edge of one of those bayous, you can catch a pretty cool view. But there's really not. It's so flat here, right? So, and we're talking about land prices. And before you showed up today, we had another partner meeting, and we were talking about land prices in Edo. And the big discussion was, hey, taxes and insurance are going up so much that we're having to start liquidate some properties because the appreciation is so rapid right now.
Right. Yeah. What is it like? It's 8. What did we look at yesterday? 14% or 18? It's something ridiculous. And
it's like 15%. Case-Shiller is up 10%, over 10%. It's 15% a year appreciation.
Yeah.
It's 15% a year if you're buying in the right markets. And I'm telling you, it's not. When I say when you're buying in the right markets, it's like inside the Beltway,
right,
Houston, right? It's inside of DFW. I absolutely hate going up to Dallas because I can't keep all the stupid freeways. But it's that the entire ring. If you go around, probably go up to Plano. I don't know how far south you go, and just essentially go all the way around DFW. Yeah. And San Antonio and Austin. My brother is trying to buy a house. They want to spend $300 to $400,000, and they're in like Buda and what's that little community that's just to the east? They're like 30, 45 minutes, an hour outside of Austin. Oh, yeah. They're getting outbid $100,000. So they're looking at a house for $400,000. They're like, yeah, if you're not $100,000 over list, you're not getting it. They'll get 60 offers. It's bananas.
Yeah. Did you see that email I sent you this morning?
Yeah, I read through it real quick.
Yeah, Austin was number 2 on the market, most promising places to buy.
It was, and I have heard Tampa St. Pete's is really hot. It's been hot for 2 or 3 years. I was in Tampa vacationing with some friends. I don't know, around this time last year. I can't remember when it was. Maybe June, July, whenever it was. And that's a cool market. Yeah. It's a really cool market.
I was shocked Houston wasn't listed on. I mean, like Houston's blowing up right now. I mean,
so here's what's interesting about the Houston data, and I believe it's one of the reasons why it's not included in the Case-Shiller Index. So the Case-Shiller Index is, I think, did he win a Nobel Prize? I can't remember if he won a Nobel Prize for it. But anyways, it just follows pricing trends of the top 20 metro markets in the country. And it's a good metric for where prices are possibly headed, but certainly where they've been. And Houston's not included in the Case-Shiller because, from what I understand, it's too big. So Houston is, given the size of the market, it is the market. Is probably a good way to put it. So when you start looking at pricing trends, it's just the market. So they really need to, from an MSA, from a statistical area standpoint, they've got to break this market up.
Right.
Because the MSA for Houston is Woodland, Sugarland, Houston. Yeah. It's huge. It's like 7-8 million people. It's gigantic. And even geographically, it's huge. It's 10,000 square miles. Yeah. So from a real estate standpoint, they ought to break it up somehow, but they don't, so whatever.
That's probably why, it's always kind of been like of all the 3 cities, like Dallas, Fort Worth, and Austin, Houston's always kind of been like looked down on a little bit.
That's right, yeah.
You know? But I love it.
Yeah, I do too. Screw you guys from
actually
Dallas.
The best market in my opinion.
It is. I have no desire. If there are 2 places I will never ever live, it'll be El Paso and Dallas. Like, I can live just about anywhere else in Texas, but there's no way. Now, I live in Fort Worth. I like Fort Worth a lot. Yeah. But I'm like, Dallas? I don't think so.
Yeah. What about Lubbock? You know, they got the
Lubbock's
far.
It is. Well, Amarillo's kind of the same thing, right? It's just, I mean, could you live there? Sure. But, down in the valley, I think the valley's cool. Yeah. Valley's a lot of fun. Anyway, so going back to land prices. So we were starting to compare some notes, and it's almost getting to the point now where in certain areas, Third Ward's a good example, where it's like, hey, can you buy this thing and cash flow it? Maybe it's only a 7, 8, 9% rate of return, but you sit on that thing for 5 years, and now all of a sudden the land is worth 5, 10 times what it was 5 years ago. That's, I think, the play in some of this stuff. Yeah. That's why we're holding on to some of our assets. The fund, we're looking at some of the assets in the fund. The fund is doing so well that it's gaining so much equity that we're going to have to sell some and buy some and do a little horse trading because the cash flow is diminishing from the appreciation. Right. Taxes and insurance keep going up. Yeah. So that's not a bad problem to have. It just means the investors are going to start getting some pretty big paydays pretty soon here.
Right, yeah, it's funny because one of the problems my parents are having is they have a house in Bel Air. It's worth $1 million. They're selling it, right? They want to downsize their house. The problem is whenever they get their, they pay off the debt that's on the property and they get their whatever cash is left. Now they want to go buy a house paid for free and clear. Yeah. Nothing is really in their. They wanted to be like $350 or less, but
there's nothing there.
There's nothing there.
There's nothing.
So everything is it's like they're where do you go unless you're going to be, I don't know.
Even in Spring Branch, I mean I bought that thing back in September. We still haven't even finished all the demo and framing yet, and lots have gone up substantially. You know how fast it's happening inside the Beltway when you're driving down a neighborhood and you see dumpsters everywhere. Oh, yeah. They're either rehabbing or they're tearing down and building new, and it's not going to stop. I've been reading this stuff, and I'm going to respond. Someone kind of called me out on Facebook, and I can respond this way. Somebody wants to put that, and it wasn't just this one person. A couple people want to put a friendly wager on whether there's going to be a real estate crash in the near future.
How near is near?
I don't know. Well, they didn't specify it. Well, you want to put some money on it. There's going to be all these foreclosures. And I'm like, I am putting money on it. I'm putting $30 million and 60-hour work week on it. That is not happening anytime soon. Right. Because otherwise we wouldn't be building these funds and doing all this other stuff if I thought a crash was imminent. Yeah. Which then I always respond with, well, hey, if you think a crash is imminent, have you sold everything in your real estate portfolio? No. Of course not. Right. Which is stupid, right? So you don't really believe what you're telling everybody.
And think about this. When was the best time to buy? In the crash.
In the crash, yeah.
So if you're not in real estate, yeah, I feel sorry for you. If
It's
the crash
awful,
did
yeah.
occur. But if you're in real estate, you should be wishing for it in a way.
Yeah, yeah, you kind of do. Well, you know what? You know what's funny is everyone keeps predicting a
If you're
crash.
liquid, I guess.
Yeah, if you're liquid enough. Everybody keeps trying to predict this crash, and I laugh the whole time because I'm like, when was the best time to buy before 2008? 2006, 2007. Even if you bought at all-time highs, and there was a crash, but you had tenants in there, who cares? Right. I'd love to go back and buy at 2006 highest market prices. I'd love to do that. Yeah. So it's all a ridiculous argument, really, when you really get down to it. All right, we get back from break. I promise we'll talk about notes. We got some notes, some passive investing. That's what Brian's here for on Wednesday. So we'll be right back.
Yeah, it's always the same stuff, man. I mean, honestly, whether times are good or bad, you should be buying something. You're just fluctuating, right? You're either getting them at better prices, or if the market's great, you're selling some of the stuff that, like you said, it doesn't meet the rent expectation. Yeah,
the only reason, let's go right into that. All right. Go A-Rock. And we got Tiger here today.
Can you see him?
Can you see Tiger? He's right here. Should be right over here somewhere.
He's over by you.
He's over here.
We didn't carpool with him.
Tiger is not driving.
Is he everything all right with him? I don't know
he's
anything about the story.
He's in a bunch of surgeries. They're like shattered ankle. I didn't realize it was that bad until this morning. I was like, oh, he's been in surgery for like 10 hours.
I just found out about this morning.
All right, welcome back. Jason Bible, Texas Real Estate Radio Network, here with Brian Burr. What were we talking about before Tiger? I completely lost my train of
good
thought.
times and bad.
Good times and bad. Oh, so the only thing that matters when there's a real estate crash is when you're selling. So that's the only thing that really matters. You should always be buying. That's that's your point earlier was you should always be buying. I'm like, absolutely right. The only time you sell is not in a crash. Right. That's how you lose money. You just don't sell in a crash.
Yeah.
Problem solved.
And a lot of the people that bring up those issues, like, are you concerned about? Those are usually people that have nothing to do with the real estate market. They don't know anything about investing in the real estate, right? These are people that have traditional jobs, that all their money's in the market, right? Yeah. And they're worried about the equity in their own personal houses being dropped so low to where, if they can't make the payment on their house, maybe the house is worth less than what they owe on it. But if you're in real estate, if you have any liquidity, you should be buying the heck out of these things.
Yeah. I will tell you, here's the craziest stat I heard last night. 70% of homes in the country, 70% have 51% equity or greater.
Yeah, I know.
70% of the market has 50%, at least 50% equity. So you're telling me that in order for there to be a market crash, we have to lose half of our value before there's ever a problem. Yeah. Like I'm not buying the crash thesis. Another really interesting thing they said is 70% of homes sell in 2 weeks or less. Mm-hmm. Like that's a crazy statistic.
It's crazy demand. I mean, we've had every single one of the properties that we've either lent on or have that we were offering for sale. We have multiple showings. Offers are coming in, like you said. Days on the market is extremely low.
Dude, I got 4 offers while people's pipes were blowing out that week last week. We got 4 offers on a property while pipes were bursting in the city. Like you physically could not drive anywhere. Power is out for most of the city, and they're like sitting on their phone. Well, I guess we're going to buy this house. It just came on the market. It defies logic.
That's what I was talking with Chelsea. Whenever investors are starting bidding wars with first-time home buyers at that price point, I mean, that's what's fascinating is you got these two people that have totally different. One's going to live in the house. The other one wants just to cash flow,
right?
Buy it and do something. Maybe it doesn't even cash flow because maybe they're unsophisticated. They have no clue about what the debt to income ratio is, or not but the debt coverage ratio is on those. And but they're buying it. They're driving up the price.
Did you see Mike Wong's post?
No.
That's what I thought you were talking about. So if you guys know Mike, he's a broker here in town. He's on the HAR board, so pretty cool guy, and. He was out looking at it. He does single family. Most of the stuff he does is commercial, but he buys single family real estate from time to time. So he was out at a wholesaler showing day before yesterday, and he posted on Facebook. There were like 60 people there. Yeah. It was just this little house probably out in Katy. That's what it looked like, or Cypress or something. And there were literally 60 people out there trying to put their cash into it. Yeah. And he said it went $40K above, I think above asking, which was higher than retail. Like they could have bought a house retail in MLS instead of, so it was crazy. And I don't think this is going to stop. And why is this not going to stop? Something you and I talked about yesterday. Money is everywhere.
Right. It's true.
They're talking about another $2 trillion into the system. Like I went back and looked, of the $10 trillion that's been allocated for this whole Corona nonsense, 40 to 50% of it is still not deployed. Mm-hmm. So this money's got to go somewhere. So we're seeing that in the note space. Remember when guys were getting 12, 13% on their notes? Now what are they getting? Like 7 and 8?
Yeah, right. Yeah.
Because there's just so much money out there, right? So if you're a note buyer, Brian's our guy that does all of our, or does a lot of note buying and selling. How do they get in touch with you, by the way, if they want to talk about doing notes and syndications, all that stuff?
Yeah, if they don't like to talk on the phone, they can basically just email me. It's Brian, my first name, Brian, at mrtxre.com. If you want to talk to me on the phone, I answer my cell phone. It's 713-620-8148. But we have a lot of notes where it's properties either we're holding or that we've actually done loans with. Mm-hmm. And we have the ability to collaterally assign that to a private lender where they can passively receive income for the duration of that note. These are usually short term, 12 months or less. And they've already been underwritten. We've already done all the paperwork on the borrower or the property. And I mean, there's a few guys in town that do this. And so that's where we decided to do that. Is basically the demand was so big where, they were really, taking a lot of these notes from these other guys. And we're like, look, we have the same volume. Let's do the same thing.
And if something goes wrong with the note, we step in and take care of it.
Right. We basically, the principal amount, whatever the loan was, we send the money back to the initial private lender. They basically will assign it back to us, and we can, deal with it. We either hold the property, foreclose on the property, whatever. We take the property back.
So the vast majority of these notes, in fact, I want to say all these notes, essentially, you wouldn't be writing them if we didn't want to own them ourselves.
Right.
So these are all properties that we'd love to own, but they're, let's say, folks that are in our mastermind group or some other ownership situation, but we'd like to own them anyway. So if the note goes bad, we just step in and take it. Right. Give us the property, we'll give you your money back, and then we just move on to the next deal, right?
And a lot of private lenders, they don't want the hassle of a foreclosure. Mm-mm. So it's really nice for them to say, look, so I'd get my money back, no problem. Whatever the principal was that you invested into the note, it's back in your account. Once you verify that, release the lien. And then, or, if it sells, or we just take it back from a assignment, and then we can deal with the property, foreclose, or. It's
completely passive, super easy for you IRA folks. You IRA folks are going to love it because it's just, you get your monthly payments. It's one property, one note, super easy. I mean, it's very passive. It's a great way to learn real estate investing. Yeah. Without doing a lot of work, without signing up for some coaching program and all that stuff. And you get to see kind of how the deal gets put together, how it's constructed.
And I think that's probably one of the biggest concerns for private lenders is if they were to go out to a networking event and try to underwrite a borrower and a property by themselves, it does take some work.
Oh, yeah.
And if you don't have the proper documents lined up, the proper insurance coverage on the property, it's like, you can get hosed.
Yeah.
And but yeah, that's one of the nice things about just having guys that have already done the bulk heavy lifting on it. That's why it's at a reduced rate at say some 7 or 8% whenever we assign it to you, because we've already done all the heavy lifting on that particular note.
Yeah, we vetted the borrower, vetted the asset. You got to think when you get into passive investing in real estate, what you're really doing is you're putting to work your money, and you're putting that money to work in such a way that you've got to really understand what it is you're investing in. And you're not just investing in a house or an apartment, let's say if you're doing a syndication. You're investing in that operator, that investor, and the asset, and how they're going to manage that thing. Yeah. So you've got to be real careful when you're doing. You got to be pretty sophisticated when you get right down to it. You got to be relatively sophisticated. So it's much easier just to buy notes from you. Just say, hey, you guys have already done all the due diligence. You know the borrowers, you know the asset. Just buy the note from you, and it works out much easier.
And we generally do a weekly email. I mean, it's either weekly or every other week, where we send out the current offerings that we have. And these are either usually properties that you, Rob, or Mr. Texas Real Estate own and hold, or they are people that we've actually done loans with. And it's properties that, it's the paper's a little stricter, the loan to values are a little lower. But these... they're every single week. We have something that at a minimum you're earning 8%.
Yeah, and really just not doing anything You're wiring your money in, and then an 8% monthly check comes out. I mean, it's
easy to calculate. Interest only.
Interest only, super easy. Like you said, we put this together because we had note buyers coming to us that were like, yeah, I'm working with a couple other of these guys in Houston, and they don't have any notes in Texas. And I'm like, what do you mean they don't have any notes in Texas? No, it's like in Cincinnati, it's in Idaho, it's all over these different states. And I'm like, well, why don't you just? I wonder if we can just sell some of the notes to you guys, and who's interested. And the response has been pretty big. So Brian, what's the best way for them to get in contact with you?
Sure, it's my cell phone again. It's 713-620-8148. Or my email, it's Brian, BRIAN, at mrtxre.com.
All right, we'll be right back.
It's hot in here.
It is. So I guess the heater hasn't kicked off down here. Yeah, it was. I was dying yesterday, and Rob's pretty quiet now. Let me open this other one. Maybe it'll get better.
You hot, A-Rock?
A little bit.
Yeah.
Well, he had it all open.
I walked in here, I was like, ooh.
It's like sauna in here.
I know.
We got to do this what's that yoga where you sweat?
Yeah, the Bikram yoga.
Bikrams. Just come in here and do the show with our shirts off, just
There we
sweating.
go.
We're getting a burn in.
Hey, I got a yoga mat and everything, man. Jen's taken me out a couple times. It is warm in there. Welcome back, Jason Bible, Brian Burr, Texas Real Estate Radio Network. What's funny is, so when you go to one of these yoga classes, we were just talking about yoga during the break because it's like a sauna in here right now. We still can't get the HVAC set up right. Anyways, so when you go to a yoga class, I guess they just assume you know what you're doing. Like there's no...
Yeah, or you sit in the back and, figure it out.
Yeah, that's kind of what... But the problem is the lights are down low. Like it's supposed to get in this state. Like it's very hippie, right? So I'll never forget, and I still don't know what I'm doing. I'm just like trying to follow, and then like the two girls next to me are doing something different, and then there's like a guy over here, and I'm like, I don't know what's going on. I can't. And it's dark. You can't see anything. And you're just sweating in your eyes. I'm like, I like it, but I'm like, I've got to get like some, white belt classes or something.
Yeah, supposedly it's good for you. It keeps you loose and young.
Young, yeah. I feel young.
You feel young?
I feel, yeah. Anyway, so I've been on that bike for I think I rode 3 or 4 days in a row now on the bike, so that's been kind of nice. But anyway, so we've got the big 75 hard challenge. You gonna do that with us?
I think I've been doing it. I think I've been reading and I've been exercising daily. Diet's decent, and then alcohol, which you and I haven't drank yet.
That'll be today.
That's 3 days in. 2 days in.
2 days in. Oh, I think I'm doing it. That's funny. I think I'm doing it so far. I mean, happy hour was last week, right? So if you guys aren't familiar, we're doing a 75 hard challenge starting Monday. And there's been a little trash talk. So there's going to be some donations to some charities if people can't finish and all that. There'll be a bunch of emails about it here in the next couple of days. But anyway, so we've got some couple of folks that are going to do it with us. It's going to be kind of fun. But it's going to be interesting. Anyways, back to the whole note thing. Yeah. So reality is if you're looking to passively invest, you've got a chunk of capital and it's not earning anything. I'm telling you right now, you got to put it to work.
Yeah, it's, that's what's great about everything that we offer is either you want monthly cash flow. We have the ability to do that. Syndications generally return some type of cash on cash return quarterly, right? So that's an option as well. So really, I mean, depending upon what you really want at this very, given time and moment, we have the ability to kind of plug and play. And if your money is sitting, dead in your house, like dead equity, where, you have 50% of equity in your property, you need to be able to access that, right?
Yeah.
There's a lot of ways to do that. But if you're sitting on cash in your, money market, checking, savings account, you are losing because inflation is killing murder. It's the silent murder of
That's
your money.
exactly what it is. It is murdering your money. And people keep asking me, well, Jason, what's the big deal with inflation? I'm like, well, it erodes your returns. So governments are funded two ways. One, of course, everyone knows is taxes, right?
Right.
But inflation, I'm telling you, is costing you much more than taxes are right now. Right. Inflation is an absolute killer. So you've got to put that money to work. I'm telling you right now. I think you gave me the stat yesterday. It was
like 2.24.
Where they think inflation's at right now, 2% or 2.5%, something ridiculous. And you and I both know that's total nonsense.
Yeah, just double it.
Yeah, easily.
more.
It's 5-6%, right? Like so you have got to put your money to work. If it's just sitting in some kind of investment vehicle, it's not earning you anything.
Yeah.
It's time to look at doing something different.
Yeah. You would hear, I got one funny story here on
Okay, go
inflation
for it.
because it really plays well.
Okay.
So you remember, Ally Bank was a bank that had one of the highest rates of return for like a liquid account. It was Ally Bank was like close to like 2%, like 1.8 or something like that. My dad, who used to manage money for other people, said that there was a guy that actually had like 4 separate accounts that each had $250,000, which was the FDIC
limit, yeah.
right? And he was
Yeah.
worried about the, if all Armageddon happens and
Right.
it was like 251, he'd lose that $1.
Right,
So that's
right.
why he divided up, right?
That's funny.
But so he was getting roughly 1.85%. So let's
On a
just
mil,
say
right?
on $1 million.
Yeah.
So what is that? That's like what?
18,000 bucks.
Is that
right?
18,000 bucks? Yeah, 18.5,
Yeah, 18
something like
grand.
that. So not only are you getting murdered by inflation, but then that is also considered earned income. Mm-hmm. So you got to pay tax on it,
Yeah.
which is like double kicking the nards.
Yeah, exactly. You're getting beat up twice. One on taxes, the other one on inflation. So that's one of the reasons why we tell folks you've got to get into syndications, you got to get into funds, you got to get into notes, you've got to get into some vehicle that earns you 7, 8%, 9%. Like our fund is 9% with equity. Yeah. So what's nice is that's really a good way to put equity is inflation adjusted. That's another way I like to look at it, especially when you're investing in real estate. What's going on in the stock market is just something completely separate and bananas.
Yeah.
In real estate is an inflation adjusted asset. So you don't really want to get into something long term unless it's got some exposure to the equity.
Yeah. Yeah. I just thought that was really interesting.
That is pretty interesting. Yeah, because you get your 2% interest, then you pay taxes on that 2% interest, and you calculate your inflation. Yeah. Your real rate of return is probably like -5% or something. I mean, it's crazy.
Yeah. So anyway, that's why you got to do real estate.
Yeah, I'm just
I always say like real estate when people I get a lot of phone calls and like how's real estate going because I've been out of my past career for 2 years, 3 years now, and I was like, dude, I wish to God it's completely saved my life, and I wish to God I would have done this and gone full time faster earlier on in life, but I mean people like that you just discovered it early. That I mean, it's life changing, really.
Well, what's interesting is we're about to fire up pretty hardcore in our EXP team, and one of the things I find fascinating is you'll have real estate professionals that have been agents forever that don't own any real estate, and so one of our jobs is going to be to change the real estate industry to say, hey, you gotta start investing. Gary Keller is famous for saying like, look, if you're not in real estate to buy real estate, then you really shouldn't be in real estate. It's that what did he used to say? You work at the Gap so you can get the discount on the jeans. Right. Like that's kind of what this deal is, right? You need to get the discount so you can buy this stuff. You don't have to buy 100 a year, but a couple a year is a good idea. Mm-hmm. It's and we've brought in a cost segregation guy. If you guys are in our mastermind, he's going to be on tomorrow, I think at 10. I got the 1 p.m. after lunch crowd, so that's going to be kind of fun. But we're going to get into a whole bunch of this inflation and taxes and all that stuff. So it's going to be a fun time. But you're absolutely right, Brian. I mean, it's a silent killer, and you don't know about it until you look around and go, wow, everything's really expensive all of a sudden.
Yeah.
Elon Musk's cars are the only ones that are getting cheaper. I wonder if anybody realizes that. Elon Musk's cars are the only one. Every year, prices go up on cars.
Yeah.
So, oh my gosh, can you guys hear that? They're ringing the bell. All right, so let me explain what the bell is. Whenever we make money, the bell gets rung. So Rob is up there banging away on the bell. But anyways. Oh, okay. We sold a class for $2,500. Ringing the. I know we got the door open so we can get some air in here. That's our that's our private money class, Rob. Yep. Yeah, we got a private money class. We're going to teach you guys how to raise money like we do. It's $2,500, mm-hmm. And if you can't see the value in that, this is not real estate's probably not for you.
Yeah, I mean it's big demand. I mean people that want to do bigger deals, raise money. It's you have to learn it at some point.
Yeah.
So.
And the real reason we're putting on the class is we don't want to pay for our cyber trucks, and everybody keeps asking us to put on classes. So we're like, fine, we'll put it on for $2,500 a head, And we'll get enough of you guys in these classes that we're just getting our Cybertrucks for free. That was really that's the impetus behind the whole thing. I'm like, how do we get free? Like, Brian, I don't know if you've had any borrowers that have done this, but have you talked to anybody that's gotten a free car when they buy a house?
No.
Okay. I've heard it happening all the time. I've bought over 1,000 houses, and I've never gotten a free car. I came close twice. And then I'm chatting with like Eddie or somebody like, oh yeah, man, every now and then, I get one with a car. And I'm like, what? How do I get one with a car in
like
it?
Like a beater car.
Yeah,
Okay,
it's not, I mean, it's like a little truck or it's nothing like, we forgot about the Lambo in here. It's nothing like cool. But anyway, so I almost got a 300ZX once and I'm like, oh, leave it. But it was a non-turbo, it was automatic, whatever. But anyways, I was like, I really want a car. All right, when we get back from the break, we'll talk more about notes and passive investing. Jason Bible, Texas Real Estate Radio Network. Oh, that's right. You got your 1 p.m., don't you?
Yeah. Unless you want to wait. It'll be quick.
No, yeah. Do your show.
It's always 20 minutes.
Yeah, do your show.
Last segment live in 3, 2, 1.
Welcome back, Jason Bible, Texas Real Estate Radio Network. I'm here with Brian Burr. You know what I noticed? We have lunch that comes in the office on Tuesdays. Sometimes do it on Wednesdays, right? And evidently the steak and arugula sandwiches are the worst because they're always the only thing that's left over in the fridge. That. And I remember Rob eating one and he was like, this is disgusting. And I'm like, so now everybody in the office knows. So they open it up. There's like 6 of those left. And everyone's like, closes the fridge. And then like, I'll have some more coffee.
The variety pack.
The variety pack, yeah. So anyways.
Cancel those.
Yeah, the barbecue ones are pretty good. That seems to be the office favorite. All right, so back on topic. Passive investing.
Yep.
If you guys got money sitting in an IRA somewhere, it's not earning you anything, you can move it to a self-directed IRA account and invest in something like notes and funds and all that other stuff.
Yeah. I mean, the goal is to always keep the money moving. So if something pays off, get it right back into something that's generating cash. We have a really nice investor platform called Wealth Block, and it's being updated pretty much every other week. So that's where we keep a lot of our offering memorandums, the documentation. All of our updates and calls on all the syndications we do is done outside of that. So it's not like we don't record them and save them inside there. Yeah. So it's really important if you're an investor to actually participate in the investor calls that Rob and you guys host every month or quarterly. But it just shows what we're doing. So you can, and a lot of these properties are in and around Texas. You guys do, like one of the things you guys are doing on anything your renovation, you open that up to people to come see for education and tutorials on what to do whether they're flipping. But I mean, they should be participating where their money is.
Oh yeah. And like I said, and if you want to learn how to do real estate, this is a great way to do it. You got a couple $100,000, buy a note or two. Yeah. Ask a bunch of questions. I mean, that's. Go look at the properties. You guys if you buy a note, you guys are welcome to go out and look at the properties. Now, if they're occupied, I mean, right, you might have to schedule a time, but otherwise, you're welcome to go out and take a look at them.
Right, and then as lenders, you don't own the property. Just so you know, you own the debt on the property.
Right,
so
right.
Don't
you get to be the bank.
Yeah, you'd be surprised on how many people, especially with the pipes. They're like they want to check on how's everything in the house. Like that's not your problem.
Yeah, it's not. Don't worry about it. You need to be asking one question: when is my money coming in? Yeah,
is my check gonna? Am I good?
Yeah, is my check clear? Yeah. That's all you need to worry about. Yeah, we take care of the pipes. You don't have to worry about it. We had the pipe fiasco and we're still going through pipe stuff. So. Which I think all of our Surfside stuff's going to get fixed tomorrow. That was funny. I went down there and looked at our Surfside stuff, the first day we can get down there. And so these properties are on the beach. I think the shortest one's 8 or 9 feet in the air. The rest of them are like 12, 13 feet up. You can't cover enough pipe to keep it from exploding. So that's the easiest way I can explain it. It looks like all of the PVC under the houses exploded into a million pieces. Yeah, I got pictures of it. One has a house filter on it. It blew into there must be 1,000 pieces sitting in the driveway. It's pretty funny. So anyways, but it's easy and cheap to fix, right? Because it just plug in some PVC, you're good to go. But in any case, the guy that runs that stuff down there evidently didn't turn it off and then drain it. Because if you drained it, it would have been fine.
Right.
So whatever. Anyway, so that's one of the benefits of having construction companies. One of your guys goes down there and fixes it all up. So.
Right. Yeah. Well, I mean... That's true. He can fix all the problems all at once while he's out there. You know?
That's right. Yeah. Yeah. Somebody said, "Hey, are you guys going to file a bunch of claims?" And I think we're only going to have one real big claim. The rest of them are all underneath our deductible. So I think it's running us $2,800 a property to fix everything. Yeah. So what do you do? Right. Yeah. Anyway, but as a note holder, you don't have to deal with any of that drama.
That's right. You know, there's pros and cons on everything, but you know, I that's why I do everything. I mean, I have passive income. I like notes. I do active stuff. You know, occasionally I'll do a flip on myself. I like syndications because somebody else who's got experience with doing the sponsorship and the lead and the management of the property, I can just participate as a passive and just, you know, get the P&Ls and the balance sheets every quarter or yearly, whatever. But I mean, yeah, it's good to be involved in everything because the more you see something that's a little different, I mean, you're adding another arrow to your, you know,
another arrow to the quiver.
Yeah, arrow to the quiver. Yeah. So I mean, the more you can be exposed to as far as investing, the better you get each time you do it. And but there's risk in everything, but
of course,
I mean, you get better at vetting.
So you know the other way I like to put this too, and this is to go back to the inflation discussion. There's risk in everything, but there's also risk in not doing.
Yeah.
So I don't think people can adequately calculate what is the risk of not doing it. I'll tell you what the risk of not doing. If your cash is sitting in an account somewhere earning Zippo, it is losing money. Every minute it's not working, it's losing money. I can't remember who it was, but they used to say, like, you know, every dollar's a little worker bee.
Right.
Now, the only reason those little worker bees are worth anything is because they're out getting more. They're going out and finding friends and bringing it back. So it's imperative for you to put your money to work as soon as it comes in. Like you had said, it needs to go right back out. Sure. So these short-term notes, you know, 7-8% make a lot of sense for a lot of folks. Yeah. Again, you get your portfolio gets exposed to real estate. You get some education about real estate without having to spend a bunch of time, and you get to essentially work with, if you will, the borrowers and us, because you kind of vet the deal and the borrower. So if you guys are interested in that, what's the best way for them to contact you?
My cell phone number is 713-620-8148. My email is Brian, BRIAN, at Mr. Texas or MRTXRE.com.
It is.
But yeah, you're 100% right. I mean, I always challenge people that have money with an asset manager, like a you know, financial planner, is try to go get your money back and see how hard it is to go get your money out. It is interesting,
isn't it? Yeah.
They fight you.
Yeah.
It's your money, but they'll fight you for it.
Oh, yeah. Yeah, because they're getting paid commissions and all that stuff on it, which is fine. Yeah. But, yeah, you've had a couple of those interesting phone calls with folks. So just in case anybody's wondering, Brian does not get paid a commission for, you know, quote, raising money. Right. So he's an investor along with everybody else over here. So, yeah, if you're interested, best way for them to get in touch with you is probably email. Yeah,
email, phone call, you know, or it doesn't matter. Either way, we'll make contact with them. I would say, like, if you reach out to us and I send you an email back or, like, I send you a phone call, just give me the courtesy of saying, hey, look, you know, I've got it, I've read it, and I'm going to either do it or not do it. You know, so I don't have to, because honestly, I'm not the kind of guy that's going to go chase you down. We don't, you know, we're going to continue on our pace with or without folks. Yeah. Right? You know, if you want to participate, we'd love to have you.
Yeah.
But we're not going to go.
Yeah, we're not going to hunt you down and badger you like, oh, I got $200,000 in an IRA, and then, you know, we're going to send you 57,000 emails. It's like, hey, look, you interested or not? No, if you're not interested in this, that's fine. Just you know, let us know what you might be interested in. But yeah, we're not going to chase you guys down. We've got plenty of stuff to do here with the day jobs.
Yeah. So. But yeah, it's really fun to kind of help people educate, because that's my personality anyways. I like to help people with questions that they have around certain investments. And like I always tell people that call me, is like, my money is invested heavily into notes and syndications. My money's next to yours, right? Yeah. So like, I wouldn't tell you to like show you something that I think would be bad if I'm not invested next to you.
Yeah.
So, but anyway, you know, that's my role, I guess.
It's a team sport.
It's a team sport. Yeah.
Investing is a team sport. A lot of folks think, you know, it's kind of like whenever you hear somebody, if I ever get introduced as a keynote speaker and somebody says self-made, I am going to lose it, because I'm like, there's nobody that's self-made. That's ridiculous. Self-made millionaire is a ridiculous claim, because you can't win in business and you can't win in investing by yourself. Yeah. And but you also can't win by going in thinking you know everything either, right? Like, oh, I can't make an investment because I don't know everything. It's like, you just got to get in and do it, right? This is an active endeavor to a certain extent. On the learning side, it's an active endeavor. You got to kind of learn. Got to read your documents. Got to, you know, do a little bit of homework. But once you get a good base level of knowledge, and like you're doing your webinar today at 1 o'clock for our passive investors, once you've got a good base level of knowledge, you just keep adding to it, and it's kind of fun.
Yeah, you get better and stronger at it, and then, there's things that you don't think you're gonna like, and then you do it, and you're like, okay, this is kind of cool.
Yeah.
And you're like, I'm gonna do more of that.
Yeah.
And there's things that when I originally got into real estate, I was like, I thought I wanted to be a landlord forever. Love being a landlord. Turns out, not so much. I'd like to maybe hand that off to a manager.
Yeah. Turns out, like last week when you're trying to find a plumber, that is not the fun part of landlording. So, all right. Last second here. How do they get in contact with you?
It's either by email. It's Brian, BRIAN, at mrtxre.com, or my personal cell phone, 713-620-8148.
All right. Thanks for watching, guys.
Thank you.
Hey, Rock, great, baby. Good show.